There's one issue that came up this week that we'd love to hear from you about, and that's NVIDIA. Where did this agreement come from? You've been quite innovative, this administration, on trade issues. Where did this come from? Who came up with it?
The president. The president, as I tell everyone, the president is one of the most open-minded people I know. He does everything at first principles. Why do we do things this way? Why shouldn't we do it the other way? And, you know, I think that this is a very unique solution, allows NVIDIA to expand into China. It can make NVIDIA chips the bellwether for Chinese technology, and then the U.S. taxpayer gets a share of that.
Keyword unique. Is it unique to NVIDIA and AMD, or is this a model for other companies?
I think we could see it in other industries over time. I think, you know, right now this is unique, but you know, now that we have the model and the beta test, why not expand it?
What do you say to people who think we're putting a price on national security concerns by basically selling export licenses?
There are no national security concerns here. We would not sell any of the advanced chips. So the H20s, I don't know whether you'd say they're 4, 5, 6 levels down the chip stack. What we do not want here, Anne-Marie, is for Huawei to have a digital Belt and Road. Right. So we do not want the standard to become Chinese across the world or even in China.
Well, we have exclusive reporting that Beijing is now sending out letters to firms saying actually shrug off those H20 and use our domestic champions. Is this something you might discuss with your counterpart?
Sure, we can discuss that, but it also tells me that they are worried about the NVIDIA chips becoming the standard in China. Look, you know, NVIDIA is an incredible product. A lot of the technology in China is, you know, they're piggybacking, and I'll use piggybacking as a kind word for acquiring our technology.
Do you mean stealing?
Your words. And yes, that's what I mean. And the NVIDIA, Jensen Huang, just stays years ahead of them.
Criticism came from the Wall Street Journal editorial board, though, about this new unique policy. They say it's a step toward government control of private business. Are you concerned? Some of these policies are starting to look like the country you're actually trying to de-risk from. Central planning, basically, out of the oval.
No, not at all. Because where we got was, you know, with this unfettered trade, we did not have secure trade or fair trade, and so now we are trying to make it secure. So, you know, you don't want to, we're not sending out the highest level chips, and, you know, we don't want to sell everything to everybody. So there is a need for intervention, and, you know, the Wall Street Journal just let her rip, kind of bunch of grumpy old men over there. I was with them yesterday.
Very quickly, I want to mention something important, and then we'll get back to the clips. Please hear me well. I am politically independent, and nothing I say is motivated by politics. I'm purely speaking about policy here. I am not a fan of companies being required to give revenue to the government. It would be one thing if we were talking about the government taking a portion of profit, but we're talking about the government taking revenue, not profit, and I think that is a very slippery slope to go down. This sets a very dangerous precedent that could easily be abused by a future administration and taken to a far greater extreme. I don't think most people understand the full implications of what's happening here. Even if this administration doesn't abuse it, they're setting a precedent that could easily be abused and ratcheted up to the extreme by a future administration. This is playing with fire, and I sincerely hope that the administration will reconsider the decision to take a portion of these companies' revenue. I understand that the argument is that this is to the benefit of the American taxpayer, but the reality is that the U.S. could provide substantially more value to the American taxpayer by simply allowing these companies to keep their China revenue. On NVIDIA's most recent earnings report, the company said that they would have guided for $8 billion in China revenue in Q2 if there were no export control in place. 15% of $8 billion would be $1.2 billion. That would be a run rate of $4.8 billion annually. NVIDIA trades at a current multiple of roughly 59 times earnings. And if NVIDIA doesn't raise prices, this $4.8 billion would come directly out of NVIDIA's earnings. An additional $4.8 billion in earnings at a PE of 59 times would result in $283.2 billion added to NVIDIA's market cap, providing substantially more money to American taxpayers than the $4.8 billion the government would be taking from NVIDIA NVIDIA in this scenario. That's not even accounting for the value added to AMD's market cap. And it's also not accounting for the value that would be added to the broader market, as NVIDIA accounts for nearly 8% of the S&P 500 and a massive 14% of the NASDAQ. Meaning, we would easily see hundreds of billions of dollars in value added in the public markets if the government would simply allow NVIDIA and AMD to keep their China revenue. This would provide substantially greater value to American taxpayers. The U.S. government could allow these companies to keep their China revenue, resulting in hundreds of billions of dollars in added public value, where the government can just take the combined roughly $6 billion a year from NVIDIA and AMD's China revenue. If we truly want to do what is best for the American taxpayer, then the choice is clear. Just let them keep the revenue. Now, of course, if NVIDIA raises prices for the H20, that does change the math slightly. But even then, the overall point still remains. If the U.S. government truly wants to provide value to U.S. taxpayers, then allowing NVIDIA and AMD to keep their China revenue would be a better way to do it. I'm all for paying off the national debt, and I'm all for making deals that are beneficial to taxpayers. I just don't think that this specific deal is the best option for America, and I respectfully hope that the administration will reconsider its decision to take 15% of NVIDIA and AMD's revenue. I hope they will choose to do what is truly best for the American taxpayer in this situation. On this topic, I'm not even sure if the 15% revenue cut is constitutional. Article 1, Section 9, Clause 5 of the Constitution states, quote, "No tax or duty shall be laid on articles exported from any state." Now, this is a unique situation because NVIDIA's chips are designed by NVIDIA, which is an American company, and those chips are exported around the world to the benefit of said American company. But the chips themselves, at least in the case of the H20, are not manufactured in the US, so I don't know about this one to be honest. But I guess we will see what happens. Again, let's forget about the headlines and the politics of the situation, and let's do what is actually best for the American taxpayer. I respectfully hope the administration will reverse their decision to take 15% of NVIDIA and AMD's China revenue, as doing so would provide substantially more value to American taxpayers, as I previously explained. Now, let's get back to the clips.
NVIDIA, by the way, speaking of this topic, target and the deal, obviously, that they've made to be able to sell their chips into China. Price target 225 from 180. It's overweight still at Piper Sandler. Everybody owns that stock. Semiconductors, worth watching today. Broadcom hit a record today. The Semis ETF hit a record today. Taiwan Semi hit your buy list today.
Yeah, exactly. Well, we bought it when I was on vacation, but first time I'm back. And they manufacture 50% of the world's chips and most of the high-powered and more complex chips. All of the AI chips are pretty much coming from Taiwan Semi, and we believe that there's a long runway. We've got 10 years of growth that we think is exceptional to earnings, and it's been discounted as a multiple because of the threat, possible threat because of China's invasion, which we think is over discounting. So we made the purchase. We wish we owned it earlier, but we bought it now.
Okay, so semis again, ETF hitting another record today.
NVIDIA getting some more love from the street today. Piper Sandler raising its price target to $225 a share from $180 ahead of earnings later this month. The firm expecting results to be in line with company expectations, but sees more room to run as NVIDIA alleviates supply shortages. For more, let's bring in Harsh Kumar, senior research analyst at Piper Sandler. Harsh, so there's a lot of demand here already. How much do the changes in China with policy there, how much is that reflected in your bullish expectations?
Yeah, John, first of all, thank you for having me on your show. It's always a pleasure to be talking to you. I think it's a lot of China that's coming up in the October quarter and the next year as we look out. So China, if you recall, was banned starting around the April early timeframe. It looks like we've got a deal for 15% cut of revenue. So we're anticipating that the month of August will be sort of deal making with the customers, getting the orders back on, unfreezing the supply channel. But we still think NVIDIA can do something like $6 billion from China in the October quarter, not doing any business in the month of August. And then for next year, we think China could be as much as $56 billion. And even if you give 15% of that to the US government, as is the deal, you'd still end up with a little over $45 billion of revenues that NVIDIA can extract from China as a market. So China is a big deal. It's back up. It looks like it's going to open back up.
How much stickiness, how much of a moat are you factoring in for NVIDIA overall, based on CUDA and a lot of the rack scale stuff that NVIDIA has been working on? I mean, we can sort of think of this in terms of, just raw performance engine to engine NVIDIA versus others, but they're really doing some things in their ecosystem that are different, yes?
Yeah, so there's two things. Let's attack this from U.S. hyperscalers, the open market, and then let's also just talk quickly about China. Let me address the second one first. So China has no alternative. The rest of the world actually has no alternative to NVIDIA or AMD or Broadcom or Marvell, some of the hyperscaler chip providers that are out here. When you think about the U.S. or the open market for hyperscalers, the moat is incredibly important. The software language was incredibly important, which was CUDA, which you mentioned, until about a year ago. But it's now sort of accepted and expected that is a pretty standard mode. The big mode is now the rack. And you saw AMD shell out something like $4.5 billion to buy a rack maker just to be able to compete with NVIDIA because the rack has become so important. And that's coming from the power constraints. And the rack is supposed to help you alleviate some of the power constraints or what they call as performance per watt. So the rack is now the important thing, and NVIDIA still got the best rack, still got the best ROI, still got the best performance.
Are efforts like AWS's Project Rainier, in which they're trying to build out a supercomputer based on their own Trainium chips, a threat to that thesis?
So the custom market is alive and well. Thank you very much. So, Broadcom and the Marvells of the world participate in the custom market. But remember, those are largely limited to specific applications. And when you you can run a general purpose sort of model on it or general purpose application on it. You're not going to end up being very efficient. You'll lose about, I've heard 25 to 30% of efficiency along the way if you try to run a non-specific model on a custom ASIC. So I think AWS is largely looking out for some of the massive workloads that it has from its customers. Microsoft notably is doing the same thing with the chips that it's trying to develop, the Maya chip and so on and so forth. And Broadcom, of course, is supplying chips to Google and Meta. But those are all for specific application. When it comes to the wide open world, serving the enterprise, serving the Azure, serving the service providers, you are back at this point still to NVIDIA 100% for most part.
It explains why you see there's room to run. Harsh Kumar, thank you. Reuters reporting today that U.S. authorities have been placing secret trackers into shipments of advanced semiconductors, trying to find chips that are being diverted into China. Christina Partsenevelis has the details for today's Tech Check. Christina?
John, U.S. authorities, like you said, may be tracking devices and shipments of advanced AI chips, but industry sources tell me we shouldn't expect to see these trackers on individual NVIDIA chips anytime soon. The trackers are ranging from tiny devices to smartphone-sized units and are hidden in server packaging for select shipments under investigation. Companies like Dell and Supermicro ship servers containing these high-end chips, but Dell tells me, quote, they're not aware of a U.S. government initiative to place trackers in product shipments. Supermicro declined to comment, and NVIDIA just said recently in the past hour, quote, we don't install secret tracking devices in our products. Well, tracking individual chips is far more complex and would require embedded software turning every processor practically into a beacon. U.S. Treasury Secretary Scott Bessent assured investors this morning on Bloomberg there were, quote, no national security concerns here with NVIDIA chips. But the smuggling problem is real. Last week, 2 Chinese nationals were arrested for illegally exporting millions of dollars worth of NVIDIA chips to China. There have been multiple reports confirming a thriving black market in China for chips. The FT estimated $1 billion worth of NVIDIA products were traded into China last quarter alone. The tracking initiative, though, John, really highlights a fundamental challenge. In the global semiconductor supply chain, keeping tabs on where chips end up once they leave the factory remains nearly impossible at scale.
And Christina, part of the challenge, it seems, is that if you try to get granular as the U.S. government and figure out too many details about where these chips are going and what's being done with them, you violate the relationship with the customer and perhaps the reputation of the company.
Precisely. And it would require these, these switches on the chips that NVIDIA has, very strongly denied. And it would, all countries would feel threatened to a certain degree. Even if NVIDIA wasn't tracking it, they would just feel like, well, if they can easily look at where these chips are going, they may be able to see other things. So, yeah, it raises a lot of questions. Should they go ahead and do this? It
reminds me of the whole iPhone backdoor discussion of several years ago when lawmakers were trying to get Apple and some others to give them access. And Tim Cook was on Capitol Hill saying, we don't do that. It appears we've moved on to now talking about AI chips.
AMD surged 5%, one of the Nasdaq's top performers. And this is interesting after analysts suggested NVIDIA may need to redesign its next generation Rubin AI chip to better compete with AMD's offerings. Separate research pointed to potential delays at NVIDIA for this Rubin chip into 2026. And so that's why you really saw the discrepancy between AMD shares up 5%, NVIDIA closing negative. But just within the last 20 minutes, an NVIDIA spokesperson just told me that the quote, report is incorrect. Rubin is on track.
All right, I hope you're all doing great today. We have some very important news, including an update to today's first video. So earlier today, I mentioned that Taiwanese firm Fubon Financial published analysis saying they think NVIDIA's next generation Rubin may be delayed due to NVIDIA redesigning Rubin so that it will be more competitive with AMD's upcoming MI450. As I said in that video, I didn't know if the report was correct or not, but I wanted to bring it to your attention so that you were aware of it. And I think that report is one of the main reasons why NVIDIA stock traded lower today. Now we have a very good update on the situation as CNBC is reporting that an NVIDIA spokesperson provided a statement to CNBC saying that the report is incorrect and that Rubin is still on track. That is fantastic news. I'm honestly surprised that NVIDIA said anything about the topic as they are currently in quiet period ahead of earnings. In the past, when news piece like this would come out during quiet period, NVIDIA wouldn't respond at all. And so while it's unusual to get a response from NVIDIA during quiet period, I'm very glad that they did respond as it is very helpful to investors. So bottom line, Rubin is still on track, and that is extremely good news for NVIDIA shareholders. I also want to revisit what OpenAI's Altman recently posted on X as he said that OpenAI will roughly double its compute fleet over the next 5 months. This is massively positive for NVIDIA. As I've said many times in recent videos, I am expecting a surge in compute demand fueled by agentic AI being rolled out to the general public. I think this surge in demand will be similar to the surge we saw with the introduction of advanced reasoning models and inference, and I think this surge in demand will extend well into 2026. I think 2026 will be another growth year for NVIDIA, and I'm even more confident in that thesis after hearing all of NVIDIA's largest customers raise their CapEx guidance this earnings season. I seriously think we're still in the early days of AI. This is not the same as the dot-com bubble, not at all. The largest spenders in this AI revolution are extremely well capitalized with the deepest corporate balance sheets in the world. Additionally, most of these companies are not investing in AI infrastructure in the hopes of eventually finding a use for it. Rather, they already have multiple use cases for it, and they're seeing demand that is so strong that supply simply cannot keep up. Just take Microsoft and Amazon, for example. They told us on their earnings calls that they have hundreds of billions of dollars in backlog that they have to deliver to their paying customers. In other words, they're already seeing a direct ROI on their AI investments, and demand is so strong that they simply cannot meet the demand. Will there be an overbuild at some point? Yes. I think there likely will be at some point, but I think we are likely at least 3 to 5 years away from something like that happening. I think we're still in the very early days of AI, and all roads lead back to NVIDIA. I really like the setup for NVIDIA through the remainder of this year. As I mentioned, I'm expecting a surge in demand fueled by agentic AI being introduced to the masses. Additionally, Blackwell Ultra has launched. Production should be ramping right now, and production is expected to ramp substantially in September. We also have NVIDIA's next generation Vera Rubin scheduled for next year. The Vera CPU will be NVIDIA's first custom CPU, containing 88 NVIDIA Olympus cores and custom designed to work in lockstep with NVIDIA GPUs. Then in 2027, we have Rubin Ultra with a single Kyber rack being able to hold 576 Rubin GPU dies for X the number of GPU dies in the current NVL72 systems. And then we have NVIDIA's Feynman after that in 2028. We have a clear data center product roadmap extending into 2028, and Jensen believes the world's computing CapEx will reach $1 trillion annually by 2030, meaning he is expecting an expanding total addressable market underpinning all of this. I continue to be bullish on the long-term future of NVIDIA, and I seriously think this company has a lot of runway ahead of it. At least that's my view of the situation. Remember to stay calm in this market. Remember to maintain a long-term perspective, and do not make any hasty or irrational decisions. With all of that being said, I hope you all have a great rest of the day, and I'm curious to hear your thoughts about NVIDIA in the comments below. Please leave a like on this video so more people will see it. And while you're down there, please consider subscribing. It's free, and you can always change your mind. Thanks for watching, and hopefully I'll see you in the next video.